Good morning everyone. In this lecture we are going to cover the questions of our economy test. Next question is, the price change in which of the following sectors are included in wholesale price inflation index, that is WPI. First thing first, few important points about WPI. WPI does not consider services, so services are not covered in WPI. Second, WPI is released by Office of Economic Advisor. It is under Commerce Ministry, and the base year of WPI is 2011-12. So in simplest sense, what is inflation? Inflation is increment in the price of a particular item. So inflation is usually measured at these levels. One is say at producer level, one is at wholesale level, and one is at consumer level. Producer level inflation is measured by Producer Price Index, that is PPI. Wholesale level inflation is measured by WPI, that is Wholesale Price Index, and consumer level inflation is measured by CPI, that is Consumer Price Index. Now in this particular question, the question is about WPI, that is Wholesale Price Index. So it tracked the impact of inflation at wholesale level, and the weightage of different items is as follows. So primary articles have 22% roughly weightage. 22%. Primary articles means, for example, agricultural items or minerals. Then fuel and power. It will have roughly weightage of 13.15%. And third is manufactured items. For example, leather, textile, machine, tool. So it will have roughly weightage of 64%. Now the question is, the price changes in which of the following sectors are included in WPI? Now explicitly we know that services are not covered. Therefore those options which are having 3 as option, they should be directly eliminated. Manufacturing items are covered and they are having 64% weightage. Electricity will be covered in second category, that is fuel and power, so of course it will be covered. And agricultural items, they will be covered in the sense of primary article. Therefore the correct option is going to be 1, 2 and 4. Next question is, which of the following were the part of first generation economic reforms in India? First generation economic reforms means the reforms which were taken at first instance. So first gen economic reforms were related to private sector, that is in simplest term LPG, liberalization, privatization and globalization. They were related to public sector reforms, external sector reforms, as we have liberalized our economy and we have globalized our economy, and financial sector related reforms, taxation related reforms. So it should be noted that legal sector reforms were not the part of first gen reforms. So these options, because they are having 4, so they are by default incorrect, and the correct option is going to be 1, 2, 3. Next question is, which among the following bank was earlier known as Imperial Bank of India? So Imperial Bank of India was nationalized and it led to formation of SBI, that is State Bank of India. So it was nationalized in 1955 and it was nationalized on the recommendations of Gorwala Committee. So on 1st of July 1955, the Imperial Bank of India was named as SBI, that is State Bank of India. The headquarters of SBI is in Mumbai. It should be noted that as of now, 3 banks are declared as DSIB by banking sector regulator, that is RBI. DSIB stands for Domestic Systemically Important Banks. That means these banks are too big to fail, or in simplest term, they are so significant that if they are going to fail, the impact will be on our entire economy. That means they are very much crucial for our economy. Which are these three banks? These are HDFC, ICICI and SBI. Now, one more thing. Recently, banking sector regulator, that is RBI, released or launched CBDC, that is central bank digital currency. So initially it was launched in four cities, and these four cities are Mumbai, New Delhi, Bengaluru and Bhubaneswar. And initially the four banks are going to be associated with this CBDC at initial stage. Bank of Baroda will come in later stage. Initially the four banks are SBI, that is State Bank of India, ICICI, Yes Bank and IDFC Bank. Next question is, which of the following are related to banking reforms? So Nasimam committee is related to banking sector reforms. Now apart from Nasimam committee, few other committees are important from exam perspective. One is Abid Hussain committee. Abid Hussain committee. Actually this has been asked multiple times, and this was a committee related to small industries. Apart from that, recently Bhandari committee was asked. Bhandari committee, this is related to reconstruction of RRB, that is regional rural banks. Another committee that was in use is Deepak Parekh. So this committee was related to financing the infrastructure sector. One more committee was there, Encasing committee or Encasing panel, that was set up to recommend suggestions in FRBM Act. FRBM Act stands for Fiscal Responsibility and Budget Management Act. One more committee was there, R.V. Gupta committee. This committee was related to KCC, that is Kisan Credit Card. So Kisan Credit Card scheme was launched to provide short-term credit to the farmers. Next question is, the ratio of bank's cash holding to its total deposit liabilities is known as, so it is talking about cash, so it is CRR, that is cash to reserve ratio. That means banks will have to keep this much amount in cash. Next question is, which of the following are the goals of 5-year plan in India? So first thing first, the goals of 5-year plans were growth, modernization, self-reliance and equity. So these were the goals of 5-year plans. Now if we talk about planning, so Planning Commission was set up in 1950. It was an executive body, and the successor of Planning Commission is Niti Aayog. Niti Aayog is also an executive body. So far we have 12 5-year plans. Post independence, the India was declared as a planned and mixed economy. The first 5-year plan was from 1951 to 56. It was based on Harrod-Domer model, that is HD model. SD stands for Harrod-Domer. Second 5-year plan was from 1956 to 61. It was based on Mahalanobis model, which we had discussed a couple of questions ago. So first 5-year plan was focused on agriculture. Second 5-year plan was focused on capital goods or heavy industry. Next question is, which of the following central public sector enterprise are designated Maharatna status? So this question is quite important, as recently REC, that is Rural Electrification Corporation, was given the status of Maharatna company in September 2022. So it is recent news. Now total 12 Maharatna companies are there. One thing that should be kept in mind is that for central public sector enterprises, there is a Department of Public Enterprises, and earlier this department used to be under Ministry of Heavy Industries. Now this has been shifted to Finance Ministry. This was done recently, so it is important. Finance Ministry. Now under Finance Ministry there are total 6 departments. Okay, coming back to this Maharatna company. Maharatna companies. Total 12 Maharatna companies are there. These are BPCL, that is Bharat Petroleum Corporation Limited, SAIL, that is Steel Authority of India Limited, then ONGC, Oil and Natural Gas Corporation, then Indian Oil Corporation, then Bharat Heavy Electricals Limited, then Hindustan Petroleum Corporation Limited, Coal India Limited, NTPC, that is National Thermal Power Corporation, Gas Authority of India Limited, Power Finance Corporation, and Power Grid Corporation of India. Power Grid Corporation of India, and last one is Rural Electrification Corporation. So total 12 companies are given the Maharatna status. Next question is, which among the following rural bank has been named after a river? So this is quite factual question, and the correct answer is Varda Gramin Bank. It is based on a river. First thing first, this is based on a river named Varda River. It is in central Karnataka, and it is a tributary of, this Varda River is a tributary of Tungabhadra. Now if we talk about this Varda Gramin Bank, so it is part of RRB Regional Rural Bank. So RRBs was set up on the recommendation of Nasimam Committee, and the first 5 RRB was set up on the 2nd of October in 1975. Out of these, first was Pratham Bank. It was the first RRB, and it was situated in Uttar Pradesh. Headquarter was in Moradabad. It should be noted that in case of RRB, the ownership stake is like this: Union government own 50% stakes, then state government own 15% stakes, and sponsor bank own 35% stakes. Sponsor bank means which is sponsoring that particular RRB. For example, this Pratham Bank was sponsored by Syndicate Bank. So Syndicate Bank was 35% owner into this. State of Uttar Pradesh is going to be 15% owner, and remaining 50% will be owned by central government. Next question is, in India, 1 rupee coins and notes and subsidiary coins are issued by. So first thing first, the notes, currency notes, are issued by RBI, and coins are issued by Government of India. So all the coins are issued by Government of India as per Coinage Act. Apart from these, the 1 rupee note is also issued by Government of India, and it will have the signature of Finance Secretary. On the other hand, the notes which are printed by RBI, they will have the signature of RBI Governor. It should be noted that RBI is the sole authority to issue currency notes except 1 rupee note as per the RBI Act of 1934. To be specific, as per the section 22 of this RBI Act. Now RBI is going to issue CBDC, that is Central Bank Digital Currency. So this is going to be the digital version of Indian rupee. Now when RBI is issuing currency, so for this purpose it maintained a minimum reserve system. That means RBI need to maintain this much reserve as minimum reserve whenever it is printing currency. So this system was adopted by RBI in 1956. As per this system, RBI is going to keep minimum 200 crore, out of which 115 will be in the form of gold. Remaining will be in the form of foreign currency. That means if RBI is having 200 crores, then it can print as much currency as it want. That means there is no limit on RBI to issue currencies if RBI is keeping minimum reserve. How much is minimum reserve? It is 200 crores. So the correct answer would be 1 rupee coin and notes and subsidiary coins are issued by the central government. Next question is Grisham's law is related to. So actually this law is related to circulation of money. Grisham's law says that suppose there are coins of different metal. Now if coins of different metal will have same coin value, that means suppose a 5 rupee coin is of silver, again hypothetical example, silver and gold. So what people are going to do, people are going to use this as coin, and the gold coin will now be either it will be stored or it will be exported. Why so? Because gold is expensive than silver. So this is Grisham's law. It says that the legally overvalued currency will drive out the legally undervalued currency out of circulation. In this case, overvalued currency is silver. So suppose a silver coin is also 5, a gold coin is also 5. So what people are going to do? They are going to use silver coin and they are going to misuse this gold coin, or they are going to use it for some other purpose. So this is Grisham's law. Next question is, which among the following is not a component of monetary policy in India? So monetary policy in India have two major components. One is quantitative and another one is qualitative. So repo rate, reverse repo rate, these are part of quantitative. These moral directions and credit rationing, these are part of qualitative. This public debt is part of fiscal policy. Fiscal policy means what is done by the government. Fiscal policy, so it is part of fiscal policy and it is not related to monetary policy. Therefore correct answer is C, because question is asking which of the following is not a part of monetary policy. Next question is, if central bank want to encourage an increase in the supply of money and decrease in the cost of borrowing, then it should. First is sell government securities. So if it is going to sell government security, suppose this is RBI, this is market. So if RBI is going to sell government securities in the market, it is going to get money from market. That means money supply in the market will reduce. If money supply will reduce, so that is incorrect as per our question, because question is asking which step will increase money supply. Second is lower CRR. Now CRR and SLR in simplest term is that money which bank cannot use to lend. That means bank cannot use this money to give loan to public. So if it is being reduced, that means now banks will have higher money to lend. So this is correct option. B is correct. Now coming back to next option, that is raise discount rate. Again it will also have similar impact. That means C and D will have similar impact, that they are going to reduce the money supply. So correct answer is B.